I'm a partner in Ernst & Young's Frankfurt's office. It's not Ernst & Young anymore, it's EY. As you saw on the slides, we rebranded. I've been working for a number of years through the cycle of advising on real estate investments, and for the last 5 years on real estate restructurings, and spend most of my time either working with borrowers or banks on finding meaningful solutions to defaulted or close to defaulted loans.
Great, thank you, Daniel. Yeah, Paul.
Does this work?
It does.
Yeah, okay. Paul Dittman, I'm with M&G Investments. M&G Investments is the asset manager for Prudential UK. This is not Prudential US. So if you see Prudential anywhere in Europe, that's Prudential UK, and M&G is the investment manager for them. And we manage, actually Pru manages about 2/3 of $1 trillion under management, and M&G manages half of that, so about 1/3 of $1 trillion. And that's in fixed income and in equity, and we also own properties. And I represent the senior debt. So I run a senior debt business that is focusing on investing the Pru money, but also external money as well. So we've raised about $2.5 billion to go into this strategy. So we're arguably one of the, even though we've been lending on real estate since the 1930s, we're one of the new kids or alternative investment strategies out there.
Great, thanks very much, Paul. Morten.
Hello everybody, my name is Morten Gustafson. I am a partner of Catella. I'm based in Copenhagen, but I'm also heading our European Debt and Equity Service Group team. Catella is a European-based financial advisory group. We are independent, but we work very much within the real estate sector, and we cover most of continental European markets from the Nordics and down to Spain. Earlier this year, we made an alliance with Strutt and Parker in the UK, so we are also now in the UK. Our experience, the whole theme of our activities has been very much revolved around how to provide solution into this lending gap that we are seeing throughout Europe. But from an advisory point of view, we have advised banks, we have advised governments, state-owned banks, we have advised borrowers, we have advised owners, boards into restructurings and how to find solutions to this whole theme we are going through in Europe. And I think where I can provide some comments into this discussion is where we are seeing the different countries are being in the cycles. For instance, in the Nordics, we are at some place, but our colleagues in Spain, they are at a totally different place.
Great, thank you, and we'll pick up those themes definitely. Michael.
Yes, Michael Kröger. I'm heading the international origination for Helaba, which is a wholesale bank based in Frankfurt. We have various sectors where we have business activities, but real estate lending being the largest. We run a commercial real estate loan book of about 30 billion euros, which is 50-50 domestic, which means Germany, and international. International is like US markets, and then in Europe we have UK, France, Northern Europe, and Central Europe. But also in the latter segments, being quite focused on, let's say, Sweden, Finland, and in the east on Poland, Czech, and Slovakia. The business is run out of local, say, implementations and Frankfurt as a cross-border approach. And we write about 7 to 8 billion euros every year, and have been continuously open for business, also throughout the crisis, which is a fairly unique feature for a German real estate lender these days. And we also have quite an opinion about the topics to discuss here today, and looking forward to this.
Good, thank you. Anthony.
Good afternoon, ladies and gentlemen. My name is Anthony Shayle. I'm from UBS Global Real Estate in London. Maybe just as a bit of background on global real estate for us, we are one of the largest global real estate players in the world. We have about $65 billion of assets under management in pure real estate that we own directly, so equity players. In the US, we have a We probably have the largest of the hybrid debt funds. That's been going for about 30 years. That really is the blueprint for what we're trying to achieve in the UK. We're in the process of launching, probably over the next 6 to 8 weeks, a similar hybrid debt fund in the UK, focused on a niche in the market. We're what you loosely call a whole loan fund. And it's an interesting little area that we're trying to work in. Many of the things that we're doing are off the radar screen of what our perceived competitors are doing. So we're smaller, a little bit more risky, little bit different, higher loan to values, longer terms. And we should have the fund up and running probably by the end of November.
Good, thank you very much.